As Africa emerges as one of the final frontiers of the Fourth Industrial Revolution, it has become the world's fastest urbanizing area, with rural migrants migrating into cities at a rate that has even eclipsed that of China and India. This fast change provides significant obstacles, but also significant benefits for countries prepared to invest billions in an infrastructure building revolution, unlike anything the planet has seen before, and no country has responded to Africa's call quite like China. Africa's 1.4 billion person population is expected to double by 2050, with cities accounting for 80% of this expansion, increasing the continent's urban population to more than 1.3 billion. Lego's population is increasing at a rate of 77 people per hour. According to McKinsey, more than 100 African cities will have a population of over 1 million people by 2025. With this fast speed of urbanization comes a plethora of hitherto unseen economic prospects. The IMF has labeled Africa the world's second fastest growing area, and experts believe that it will be well on its way to being a $5 trillion economy by 2025, with household spending predicted to rise at a 3.8% annual rate to $2.1 trillion. The world's focus is increasingly shifting to Africa, and analogies to 1990s era China are no longer seen as far-fetched prophecies. China has also become a key role in Africa's urbanization push, with Chinese businesses driving and sponsoring a large portion of the continent's infrastructural developments. Right now, any large project in African cities with more than 3 stories or roads longer than 3 kilometers is almost certainly being constructed and engineered by the Chinese. Even before the Belt and Road Initiative was initially unveiled in 2013, China was making significant inroads into Africa's urban development sector. When the Communist Party of China took power in 1949, it was essentially unrecognized by almost every other country in the world, the majority of whom supported the Republic of China, the old government that the Red Army pursued away from Taiwan. However, China undertook considerable campaigning throughout Africa, gaining recognition for the People's Republic one nation at a time. These political obligations were soon returned in concrete and steel, as China began constructing railways, hospitals, colleges, and stadiums across the continent. However, there were other reasons for China's early partnerships with Africa. Even though the colonial powers were mostly gone or on their way out, the continent was still a stockpile of natural resources, and China wasted no time having to step into the power vacuum, trying to lay the political and economic inroads that have granted Beijing the advanced position it has today. China is currently Africa's largest trading partner, with annual Sino-African commerce exceeding $200 billion. According to McKinsey, over 10,000 Chinese-owned enterprises are already operating throughout the African continent, and the value of Chinese business there since 2005 totals more than $2 trillion, with $300 billion in investment currently on the table. Africa has also surpassed Asia as the top market for China's international building projects. To maintain this momentum, Beijing announced a $1 billion Belt and Road Africa Infrastructure Development Fund and a massive $60 billion African aid package in 2018. So anticipate Africa to continue tilting east as economic linkages with China become more numerous and powerful. According to Chinese President Xi Jinping, inadequate infrastructure is believed to be the biggest bottleneck to Africa's development. Africa's governments would need to invest $130,170 each year to address their infrastructure demands, while the African Development Bank estimates that they are $68,108 short. Closing Africa's infrastructure gap has been a goal of successive waves of colonizers, and China is the next in line to extend deep into the continent with railroads, highways, and airports. Infrastructure is what Africa most needs, and China is best placed to supply it. Many African leaders are aware that China was in a similar position 30 years ago, a backwater country whose economy accounted for less than 2% of the world GDP. However, over the last few decades, China has stunned the world by constructing a high-speed rail network that now exceeds 29,000 kilometers, paving more than 100,000 kilometers of fresh expressways, constructing over 100 new airports, and constructing no less than 3,500 new urban areas, including 500 economic development zones and 1,000 city-level developments. China's GDP has increased by more than 10% throughout this time period, giving them the #2 spot in the world. Africa is hungry for exactly this type of infrastructure-induced economic growth right now, and many African leaders are turning to China to transfer their expertise to their countries. Many of Africa's largest infrastructure projects, including the $12 billion coastal railway in Nigeria, the $4.5 billion Addis Ababa-Djibouti railway, and the $11 billion Bagamoyo megaport and industrial zone are being created through Chinese cooperation. Since 2011, China has been the most important factor in Africa's infrastructure development, with a 40% share that is still growing. Meanwhile, other players' shares are plummeting. Europe's share went from 44% to 34%, while U.S. contractors' presence plummeted from 24% to 6.7%. Jingli Wang, a research fellow at the University of Sheffield who has conducted significant case studies on urbanization in Nairobi, feels that Chinese SOEs are truly dominating the African infrastructure project market. Chinese construction crews may indeed be found everywhere throughout East Africa. As Raghaveen points out, the reasons for this ubiquitous presence are simple. Many African contractors simply lack the capacity for large-scale development projects. So if you want to do large-scale construction, you either turn to a Western firm or a Chinese firm, but the Chinese company is always able to compete with you on price. When we look at Africa, we find many nations chasing fantasies of a brighter economic future while drowning in large sums of infrastructure-created debt that they might not be able to afford. The $4 billion Addis Ababa-Djibouti Railway ended up costing Ethiopia nearly a quarter of its total 2016 budget. Nigeria had to renegotiate a deal with their Chinese contractor due to non-payment, and Kenya's 80% Chinese finance rail system from Mombasa to Nairobi already has gone 4 times over budget, costing the country upwards of 6% of its GDP. The IMF discovered in 2012 that China controlled 15% of Africa's foreign debt, and only 3 years later, China accounted for almost 2/3 of all new loans. Some experts are warning of debt traps, with some even going so far as to term China's actions a new kind of colonialism. For long-term economic and political stability, China requires what Africa has. More than 1/3 of China's oil comes from Africa, as does 20% of its cotton. Africa holds nearly half of the world's manganese reserves, which are required for steel manufacturing, while the Democratic Republic of the Congo alone has half of the world's cobalt reserves. Africa also possesses considerable amounts of coltan, which is used in electronics, as well as half of the world's known supply of carbonatates, which are the principal source of rare earth. However, there is a widespread misperception that all Chinese ventures in Africa are supported by Beijing. More often than not, Chinese SOEs operate in Africa merely for profit, with no regard for their government's aspirations. However, it can be difficult to distinguish between China's commercial and strategic ambitions in Africa, as the two frequently overlap. Beijing's top priorities include the globalization of Chinese construction and IT industries, as well as the creation of infrastructure to better exploit and export African resources. While the infrastructure being developed on the ground is not often choreographed by Beijing, it does eventually serve China's greater geo-economic goals. Now, do you think China is transforming African cities significantly? Whatever your point of view might be, let me know in the comments section below. While at it, smash the like button and share the video widely. And remember to subscribe and turn on your notifications to never miss out on more content like this. Thank you, and bye for now.